We now start with a panel discussion on how digital lending and fintechs are changing the SME finance scenario, a UK and India perspective. For this session, our moderator is Ms. Visa Kannan, partner Sison Capital. And on the panel, we have Mr. Anup Nair, Country Head India Interpolitan Money, Mr. Akshay Chopra, Senior Director Growth, Jakarta, Mr. Vishal Gupta, CEO and co-founder Hylobiz at Vienna, Mr. Gurjotpal Singh, CEO India Tide, Mr. Sandeep Kakar, Chief Business Officer Veen, and Mr. Vipul Sharma, founder and CEO of Checkbook. Let's welcome them with a round of applause, everyone. And over to you, Ms. Karan, for the panel.
Thank you. Thanks so much. Can you all hear me, everyone? Okay, fantastic. Thank you, everybody, for joining us for this SME lending panel. So I think SME lending has largely been in the news for about 5 to 10 years now. The credit gap in India and all emerging markets is actually pretty well known in terms of how difficult it is for SMEs to access loans from traditional financial institutions. And fintechs, in a very large way, have tried to bridge this gap. So, welcome all fellow panelists to this discussion. Would love to get everybody's perspective. And everybody comes from very diverse fields here to tackle the same problem. So hopefully it should be an interesting discussion. So just to, I think, kick things off, let me go to Vishal. And if you can, lay out what the problem statement is, what fintechs are doing to help, and just kick us off into this ride would be lovely.
Sure. As fintechs, right, within the SME world, the whole supply chain ecosystem, fintechs are essentially expected to go few miles deep into the SME's life, understand their day-to-day trade, and I guess then effectively the credit can be laid, essentially the segment that we are talking mid-tier and going into the long tail. What is missing and what has been missing all this while for the traditional banks and the FIs is largely access to data. What is that these SMEs do? Whom do they deal with? Whom do they sell to? Whom do they buy from? That visibility is very rarely available, or it's highly unorganized. It's in possibly 5 different tools and 10 different systems, or possibly just on the piece of paper for the segment of SMEs essentially that we are talking of. See it as wholesalers, distributors, traders, regional manufacturers, going long tail into retailers, micro distributors. I mean, that's the segment essentially, just to lay out the position that within the value chain that at Hylobiz we address. And to be able to handle that, I guess from fintech's perspective, what we always looked at it is go after solving the 4 C's problem of these SMEs. And these 4 C's being help them ease out on their day-to-day commerce. So basically you need to be there on the day-to-day transactions of this SME, ease out their commerce, which is their day-to-day trade documents, orders, invoices, purchases and stuff. Second C, ease out on their cash flows, basically their collections, their payouts, and digitize it through, again, being as much as invisible that you can be. And both these pieces are possible today through connected ERP APIs, through connected banking APIs. We can look at commerce getting digitized. We can look at banking getting digitized, AR and AP getting digitized. Third C, as and where applicable, is largely the compliance, wherein in an infrastructure that India kind of nation provides, GST data is available, e-way bills, e-invoices, plug into that, solve that side of the problem, and again, be on the flow of the transactions for these SMEs. And these are the 3 C's, which from Hylobiz and Vienna's perspective, as a fintech, we see is the strength that we can deliver in the ecosystem. And then credit is something which becomes much easier for a FI to lay on top of this data. So I guess largely the data availability, easy access to data to be given to FIs to be able to underwrite is the problem, and that's what fintechs are solving for, and that's what we are doing.
Got it. Gurju, just bringing you into this conversation, I think Vishal's point largely is that the fintechs use a lot of data to, lend better. So you underwrite better. You kind of have an ability to kind of figure out, I guess, intent and, ability to pay. Given you come from a UK India kind of perspective on SMEs. Would love to get you in on where you think the UK is different. Is it different? Are SMEs in developed countries? Are they ahead of us in terms of where the credit gap is? What does India do to get there from a fintech landscape perspective?
Sure. As he said, it's very important to get the digital footprint for SME, for anybody to underwrite and lend efficiently. That is a important problem to solve. But how do you get to that? So in UK, we are the largest challenger bank focusing on SMEs. We have close to 9% market share there. Now, how did we manage to do that? Was that we were present where a SME needed us. So we start with offering him a financial platform when he needs it very quickly. So we do everything digitally and enable him with a financial platform so that his pay-ins, payouts of the business start. From there on, we play important role in their journey of getting organized. So the new to organized and unorganized to organized are both very important TGs for us. 20% of our base has registered on Company House, which is a combination of, say, MC and GST for India, through our platform. So, that's a role we play. And then we bring bunch of tools. I'll talk about a few, right? We help them do tax compliant invoices. With that, we have built tools which will help them collect, right, reminders, etc. And as they collect, right, how do you reconcile that payment? So helping them with this entire financial and admin essentially, solves a problem, and hence, they are likely to use the platform. And we will get more rich data from their side. Another product which has done very well for us in the UK, we call it Credit Builder. Now, a very important question for micro and small enterprises is, who gives you your first loan, right? So with this product, with all the data that we have, right, we assist them in, starting with smaller lines so that over time they are able to get efficient credit from the formal, financial ecosystem. Now, this is all in UK. Now, coming to India, right, our thesis has been that, the SME needs globally are very similar. And considering, UK and India have similar framework in terms of, in terms of the way our systems and, laws work, right? We saw a fitment there. And that's been the case with a very small base that we have. Now, when we interact with the users, if you look at these micro and small enterprises, somewhere around 60% of them do not have anybody doing, to do finance on their teams, or they do not even have GST. They waste a lot of time in bookkeeping, reconciliation, these kind of pieces. So if we, when we bring these to them, right, it's really helpful. Other pieces, the traditional banking system, right, they do not see it as a transparent system. A very large percentage of them are impacted by hidden costs, are impacted by, off times. And then they need to spend a lot of time doing admin and cash management, etc. So if, we try to bring all that to one platform, and when we do that, there is more likelihood of him using it and bringing more data, and which essentially, solves the chicken and egg problem. You have the data, and then you bring the first credit, and then that, flywheel starts, and you are able to bring working capital to the micro and small enterprise as and when he needs. So that's been our view in the ecosystem.
Sure. So that sounds pretty similar, actually, the India experience and the UK experience in terms of, the necessity for credit, of course, but also, how you go about solving it sounds pretty similar. I think this is a great time to...
And maybe
Sorry.
sorry about that. Just to add to it, just one last piece. With the UK and India trade agreement coming up, right? I think it's again a very good opportunity for somebody like us to have SMEs on both the sides, do business in a very organized way. So that's also a great opportunity we see, and a focus area for us.
Great. I think, like I said, great time to bring in Vipul. In terms of, I think what Gurjot mentioned was a lot of SMEs, and I think we also know this intuitively in India, right? They're not ready for any sort of data services because they don't have the entire platform ready, or they don't have preparedness to access financial services. And we know that you've been trying to solve this problem for a couple of years now. So, what is your perspective on this readiness to access financial services?
Right. So I think if you go back to like when I joined HDFC Bank in like 2006 time, a lot of people over here as well might remember that at one point you could they used to get cash salary, salary with check and so on and so forth, and banks used to accept that when they would give loans. And then I remember in 2006-7 in HDFC Bank, ICICI Bank, the larger banks, we all kind of decided that okay, you need to have the salary coming in your account, and only then you will get loans or credit cards and auto loans and so on and so forth. So that was really the watershed movement when suddenly all corporates started having salary accounts and deposit in the accounts and so on and so forth. And for a lot of people in the salaried segment, which is about 7 crore customers in India, the reality is that the reason why the salaries go in the account and all of that is because it becomes a ledger of information, basis which then you can get your credit cards, your auto loans, your home loans, and so on and so forth. And I think that ledger ecosystem hasn't really built up on the MSME side, on the sole proprietor side. And you must have heard about 63 million MSMEs in India and so on and so forth, which is about 6.5 crores, similar in size to the salaried ecosystem. And the reality is that only about 50 lakhs are private limited and partnership firms. The rest, almost 5.5, 6 crores are actually sole proprietorships, running shops, running, cloth stores, bartan ki dukaan, chemists, all of that stuff. So that's the large ecosystem. The problem is that why they don't put money in accounts is because they don't get lending against it. Just like if weren't getting your home loans and I wasn't getting my home loan, auto loan, I would be like, why should I get money in my account, right? So I think the reality is that that's the culture we need to give. And there's a catch-22 situation there where larger, older banks at times have said, oh, once you have like a 1 crore turnover, 2 crore turnover, then I'll open your current account, I'll let you have access to lending, and so on and so forth. And that kind of becomes a very weird situation because the customer actually, the Kirana store owner, for example, actually needs lending to be able to get to that turnover. So that's Cash 22 is what we're trying to solve for by really giving him the opportunity to open sort of a digital account, right, a current account. So we let customers open a current account in 3 minutes. In traditionally it takes almost a month to open a current account. We're able to give him access to lending from the get-go, and we give him what we call needle mover loans. 3 lakh, 4 lakh loans, because if you give him a 5-10,000 loan, it just goes into some kind of consumption or goes into buying working capital or whatever. But needle mover loans allow him to actually modernize a shop, actually get into a new distributor relationship, or get into a new ancillary business. We have customers who are at a grocery store, and then they set up a kitchen at the back, and now they are also making food and delivering in the ecosystem. So I think that is transformative for the customer and actually leads to higher revenues. So similarly, we give insurance. So we have an insurance broking entity, which is a 100% subsidiary, and through that we are able to give a credit life. So if the customer dies, it doesn't mean that the family has to sell the shop. And we've seen situations where the customer died because of COVID or whatever, and the son, they had to pay off the loans, they had to sell the shop, and the son became an Ola driver. It's unacceptable. It's a generational loss. So how do you kind of fix that is where we come in. We're like, okay, you got insurance. If something happens, unfortunately, your loan is covered. You continue on your path, right? Giving shop insurance in case of a burglary or fire, it can get protected. So all those things, so these are sort of the building blocks of it. Build the ledger of the customer through accounts, current accounts, make it super simple for him to open it, which we've done. Give him access to lending so that he has needle mover loans, which actually increase his revenues and allows him to increase his turnover. And of course, give insurance. So these are the three main sort of blocks that we have, we feel are super important for almost 6.5 crore customers. and that segment is growing at 17% year on year. And the reality is that the number of business loans in India is very, very less. So out of 50 crore CIBIL, bureau reports, less than 3 crore business loans exist, where a lot of private limited companies actually have multiple business loans and so on and so forth. So access to credit is something that we are really passionately solving for. And ledgers and insurance and all that stuff really adds to the confidence that the customer gets in the product and the program. And I think there's a long way to go for an ecosystem. I think one of the key differences is that if you go to a store in Germany or you go to a store in London, the guy will have a credit card, to pay for his working capital, to pay, let's say, a Metro Cash and Carry, or to pay one of his suppliers or Amazon or whatever it is. But in India, that is non-existent, and I think we want to change that. Will our retailer community or trader community 10 years from now be as sophisticated as a retailer abroad? Will the stores be as modern as like a 7-Eleven that you see abroad? Definitely. And I think that's where the opportunity is.
Wonderful. Thank you so much. I think the three of you have kind of spoken about a more global format in terms of, how do you digitize the MSMEs and SMEs? You get rich data from them and then you lend on the back of that. Would love to get in, Sandeep on the supply chain invoicing and enabling that ecosystem as a specific loan product. And after that, maybe Gurjot, you can talk about the BNPL part of it. Would love to kind of just deep dive a little bit into types of kind of loans in the MSME ecosystem.
Sure, sure. So, basically, MSME, to my mind, is in an ecosystem is two kinds. Okay, there are manufacturers who supply to large corporates and medium corporates, and there are the distribution channel. There are distributors, sub dealers, retailers. Now, if you look at the ecosystem today, it's massive, and if one one adds the turnover of companies above 1,000 crores in India, okay, on the sales side, it probably back of the envelope calculation should come to approximately 6 to 7 lakh crores, okay. And if I look at the procurement side, SMEs supplying to large corporate across different tiers, tier 1, tier 2, tier 3, that should also probably add up around 2 to 3 lakh crores. The supply chain finance book today by the top banks and the few top NBFCs today, approximately, is about 80 to 90,000 crores. Now, you see the massive gap which is available to finance. For the simple reason why this is not happening is because most of the banks have only touched the upper layer of the pyramid. Everybody is looking at a direct distributor, large distributor of HLL to finance. Nobody is actually looking at a small sub dealer or a retailer. Things are happening, there is a change happening. And to my mind, the only way to solve this is that there has to be more and more lenders coming into this space. Okay. And it also solves a problem for the SME because most of these, the long tail SMEs borrow unsecured BL for about 3 years and actually put in for working capital use. So there is a massive asset liability mismatch they're undertaking. So just to conclude, to my mind, I think so. Most of the banks and NBFCs actually should do about 25% of their book through supply chain finance. Okay, and that's the way to actually solve this problem of direct access to this. Thanks.
I'm going to just wait on you a little bit, and maybe Akshay, you can just kind of maybe respond to Sandeep on in terms of how you guys try to enable banks, and what is really the way to get banks to be more involved in this SME lending ecosystem, given the credit gaps he just highlighted.
Yeah, great segue actually. There are a couple of things that we as Jakarta really enable, and we've been trying to do that now for the past 3 to 4 years. What we have seen is banks traditionally have a lot of legacy systems. Now, on top of those legacy systems, they're not able to match what some of the new fintechs are able to do. And which is where partners like us come sit on top of their legacy systems and help them move the needle. A typical SME proposal would take, a small ticket proposal would take about 4 to 5 days just to get logged in into a typical legacy system. And a larger ticket SME proposal would be anywhere between 10 to 15 days. Now, data solves a lot of that. We did speak about data coming in very quickly and solving for that. But systems that sit on top of the legacy systems really enable a lot of that to move faster within a traditional bank, which didn't happen. And today we are seeing, some of the journeys that we enable. We are seeing small ticket really being STP, and uh, most of the borrowers now getting loans in literally 3 to 4 minutes. If we solve for some of the KYC problems, so ETB, NTB, there is always that, but we are seeing that happen now. Proposals for larger ticket because of the data being available and systems now accessing and collaborating, or getting all of that data together, helping the bank take a decision faster, is getting the RM or the customer a decision in less than 10 minutes for a larger proposal. Our research has shown that it's not important to get the money in the bank in that time, but it's about how fast can I tell you that I'm willing to give you a facility. And that for us has been how we've enabled traditional banks really change that. Another aspect that we have enabled is decisions were largely taken, if you had to take a GST return earlier, it would be 12 months of GST returns physically entered into a system. But with one OTP now, you can actually understand the entire business behavior of that entity. So we're now enabling the whole decision life cycle as well. Not only the whole process life cycle, but the decision life cycle. And which is where traditional banks are now trying to, get much better at what they've been doing. So I think two primary aspects there.
Got it. Gurjot, just moving on to you from supply chain financing, is there a BNPL aspect here that kind of blends into this ecosystem?
Right. So our thesis is that a SME, needs to or has cash crunch at different periods of his life cycle, right? And we try to solve this. People, different, fintechs are trying to solve it in different shapes and forms, and supply chain finance or a buy now pay later are ways and means of doing that. Our thesis is that we should offer them a working capital line which they can tap into as and when they use. But how do you make it efficient is the challenge, because unless you price it right and unless the size is right, you may not end up actually helping the SME. And I believe data, the way we use data, that plays a very important role in that, because typically one has to understand the SME's business in depth. Depending on location, on sector, there'll be different lean and festive periods. There'll be different business cycles. We need to we use data to essentially make sense of it. And at times the working capital requirement may be 10x of the usual, right? So if you do not increase your line at that need based on data, there would be challenges, right? And then having good view and access to the receivables, I think that's important, and it automatically then solves the problem of collections, etc. So I think we need to make these loans or lines more need based, rather than making it with looking at it with a traditional psyche of a term loan or a amount based loan. Make it more nimble and flexible, and that's been our thesis, and it's worked pretty well across markets.
Understood. Anup, just bringing you into this discussion, SMEs play a big part in our export-import ecosystem and infrastructure. What are your thoughts on kind of the credit gap in that specific market, and how do we kind of enable credit on that front?
Thanks, Fiza. So I'm going to take a step back, maybe. I think before even we look at credit, as a country, I think a lot of our SMEs are beginning to look at offshore markets to increase their profitability, look at bigger margins, right? Increase their distribution outside of the country. And one of the big gaping hole there is banking, and that's what we're stepping in to solve. While we're stepping in to solve it, we're also realizing that credit is a massive void in that space. We're also working with a lot of factoring partners where there is currency leverage for these SMEs. We're looking at giving them access to capital markets, which gives them a lot more in terms of working capital right there. But the base of banking itself is ripe for disruption from a transaction banking space. And that's where we're trying to solve. We're trying to internationalize these SMEs sitting out of India and get them or bridge the gap of getting them to a global market space where they don't at least have to worry about getting a bank account to trade internationally. So this is baby steps for us, but yes, we're pretty keen to work and set up a full swing business out of India for it.
Good. Before I open it up for audience questions, would love to kind of have everybody on the panel, share maybe a 2-3 minute view on, what is the biggest challenge with adoption in the SME credit market, whether that's regulatory, whether it's from the debt market side, what do you think? Maybe we can start off with Sandeep right at the end.
Yeah, so two things. One is from an SME side, there are opportunities available. The SME has to actually go out, look out for opportunities and not kind of depend on one source of liability, okay? Second thing, from a bank side, as I said earlier, banks need to adopt the technology, okay, supply chain finance technology. And as part of VFin, we actually provide a complete end-to-end solution in terms of supply chain finance. For the simple reason is supply chain is not a single product. It requires multiple products like it's supplier finance or dealer finance and all that stuff. And last, most of the banks actually should move into alternate data and as a policy for most of the smaller ticket size, completely. They should actually move to alternate data, like look at to whom he is supplying, from whom he is buying. And that's the only way to actually broad base and provide finance to SMEs.
Got it. Akshay?
I think it's a mindset. For the SME, traditionally they've, the whole idea that all of this can be digitally made available to a lender is a little alien to them, right? Today, for example, if even a lender goes and says, yeah, I've completely digitally transformed myself, I have, the best processes, all of that, but just getting to ask them to give one OTP, which gives them access to the financial information, is a challenge. And that, I think, will, over a period of time, I think it started with Aadhaar, started with how that changed a lot of it. I think that will now change, and that's the mindset change that we need so that we can solve for this for all the SMEs.
Understood. Vipul?
Can you hear me? Yeah. So, interestingly, I think in the space that I'm in, which is sort of, sole proprietorships, sort of under 40 lakh turnover customers, shopkeepers, traders, and all these, textile shops, or chemists, and hardware stores, and restaurants, and so on and so forth. I'm actually quite happy that banks haven't gone there yet. So it's a big blue ocean for us to, sort of go after. And the other thing is that there's, even though there are sort of lenders who are, obviously doing stuff for this ecosystem, the gap is extremely large. Most of our customers have some of the exposure to a money lender today on the lending side. And they'll take those loans at 5% flat per month. 3 to 5% is the rate. So if you're taking a 1 lakh loan, you're paying 5,000 rupees every month, and at the end of the year, you're paying 1 lakh. So you paid 1,60,000 rupees back to the money lender. It's freakishly expensive, but the way they see it is, they'll go to Sadar Bazaar in Delhi and they'll buy something over there for 200 rupees and they'll sell in their market for 800 rupees or 700 rupees. And that's a great profit. And through that, he will pay off that 5,000 rupees. So the Indian, the dukandar or the shopkeeper or the trader or the distributor is a very smart guy. And they've been doing business for thousands of years. They know all that. But I think the opportunity really for companies like us is to be able to really capture the market. That's one thing. And in a space where right now most of the banks aren't coming in because they have their hands full with corporate, salaried, government business, all of that stuff. And I think the other one is, of course, getting the reach, going after them. And we don't believe in like doing, sort of TV ads and stuff like that. Or most of my customers are not on, um, on Google or Facebook either, except for good morning messages and all that. So I think that is not the ecosystem. So we have to be able to be creative enough. We do a lot of partnerships, ecosystems. So I think those are the things that really help us reach out to these customers. Most of them, if you ask me, and there was somebody who runs a very big trade platform, and he asked his customers, about 1 million of them, do you want digitization or do you want access to finance, right? And 80% said they want finance, you know, because digitization is like a very interesting word, but nobody really understands what that actually means. So I think if you can give him access to finance, which starts with building the ledger, having accounts, and all of that stuff, you get to a stage where the customer starts, and if he gets finance, and I think what Akshay was saying, that the customer doesn't need the money in his account immediately, but he needs to be able to be have that confidence that yes, I'm approved, and I'll get the money in 1 or 2 days. It's okay. And I think that's a very big part of building the trust as well. So I think those are the interesting sort of bylines, right, about the space that we are in and the kind of ecosystem that we're going after. So definitely, very interesting times ahead in terms of how we go about it, and we actually want a lot more competition in this space.
But you do think digitizing is a necessary condition to lending, to accessing those financial products,
So
or
I
no?
think I think I think so. For example, we have something called Checkbook Khata on our app, right? Which is essentially a digital ledger of all the sales he does, which is could be cash and all that stuff. We don't look at that data because it's really user-generated content, doesn't really add a lot of value. But do I want him to digitize every single purchase and every single sale that he does? It's not that valuable. What is valuable is what are his financial transactions that are happening. Capture that in a sort of ledger, which is essentially an account, and that's what an account is. It's just a ledger of information. That is enough. Where is he getting the money from? Where is he paying? Is he taking money out? What is going into cash? What is going towards, what are the credits he's getting from his customers, which could be UPI, and so on and so forth. Having that data is enough, but digitizing his entire workflow in a shop where, and we've seen customers tell us, नहीं नहीं आप जो भी whatever system you bring to me in a shop, I know much better than the system what is my inventory, मेरा कितना माल चाहिए, मेरे को कितने मैगी पैकेट्स खरीदने, मेरे को कितने गुड्डे के बिस्किट खरीदने. You don't have to tell me, I don't need a system. It's only going to increase my work. So yeah, I mean, then you can't really force him. And then there are a lot of companies who try to make them adopt a ERP system and this thing and that thing. Unless they get to a certain size where they are like 2-3 crores of turnover, then yes, they'll get an ERP system. But the bulk of them aren't, and they know exactly how much inventory they have. So I think we don't want to really focus on digitizing that aspect, but get him into sort of formal credit. Most of my customers actually have a cooperative bank account. 50% of our lending customers have a savings bank account, right? How do you kind of make that change so that he can leverage his current account really better? Because in his savings account, he'll also have all kinds of personal expenses. They just get mixed up, and he will not be able to access lending or other products and so on and so forth. How do you make his POS experience better? I think those are the things that really will help him.
Got it. Anup, adoption barriers to your mind?
Yeah, I think if you were to solve for capital distribution in the country, I think from a lender's perspective, the cost of capital has to get solved, and cost of compliance has to get solved so that they can, make the process a lot more efficient. And from a borrower's perspective, I think cost of capital has to be looked at from an alternative perspective. As long as the money is not cheap, I don't think the SMEs is serviced well in terms of its own leverage, the book leverage. I mean, they can borrow at whatever rate that they're borrowing today. If it's not going to help them grow their business, that money is just adding more debt than is needed. So I think from an overall perspective, cost of compliance and cost of capital are two big solves that I think we need to focus on as a business.
Got it. But from an opportunity cost perspective for the SME, if they're taking like loan shark loans at 3%, 5% per month, isn't that, isn't the alternative better?
I wouldn't go down that route to say that alternative is better, because the banks and the non-banks and today fintechs, because they were becoming participants to the capital market ourselves, I think need to solve for this, because that loan shark model has really no protection for the borrower. Right. With the frameworks that the country has today, I think it is building that framework of protection and trust. But we really need to solve in terms of, in terms of the provider, we really need to solve for cost of compliance, and that'll only come with regulatory dialogues.
Sure.
Can I just add to what Anup says? See, I kind of agree with him. The cost of capital has to come down. The reason why the cost of capital is not coming down is because obviously there is a risk weightage which is to the SME. Okay, but if you look at globally, if you look at transactional based facility, that's the most least NPA level, and that's where the SME finance has to go. And automatically, if the credit cost comes down, the cost of capital will actually come down, because most banks are building that credit cost in their price. I thought I'll just add to Anu's.
Yeah, fair point.
Gurjot?
So, my view on this is that, adding to what all others have said, is that we need to reduce friction in businesses who are trying to become organized, either new to organized or from unorganized to organized. Today, if you have to, set up a new business, register with MCA, get a GST, etc., it's not a DIY thing. It's not as straightforward. Filing GST is not as straightforward as filing your personal taxes, right? So, there is a friction. SME needs to involve a professional there, pay a fee. So there is all sort of friction involved. And we need to solve for that. We, as an economy, are on the right path, but this has to be accelerated. And then platforms like us then should use that digital underlying infra, to build DIY products which will enable them to do these things on the go along with running their businesses. So I think doing this, removing this friction, which will essentially help them or bring value to them in running their businesses in a proper compliant way. The benefits that come with them, they would not have to depend on a loan shark. Today a loan shark loan is very convenient for him. It's just one phone call away. How do we reduce all that friction and help him, bring all that business into the organized world, away from cash? I think, that will enable a lot of SMEs to access formal credit.
Vishal?
Sure. So I guess all of us as fintechs are coming at it from different points, also different level of the pyramid structure of the whole supply chain ecosystem. So as Vipul said, at the bottom of the pyramid at MSME, so the entry point itself is more like get this guy digitized at the bank, at the current account level, and build the rest of the capabilities which make sense for the segment like that. The segment a level or two above, which someone like us look at, they are not new to technology. They have few technologies. Could be tallies, could be Zohos, could be SAPs of the world. So key remains for us as fintechs to basically embed into their business deep inside, one way or the other. So entry point could be a bank account, a card, or a automation system, wherein we get plugged into their ERP systems on one side, and not really sell a new bank account or a new card, but get connected into their existing bank account and the card, whatever they have. And these are two different segments within the pyramid. This essentially addresses the alternate unstructured data, which Sandeep covered, almost everyone spoke about. So I guess that's possibly the barrier one, which we are all going after. That's what all the FIs are asking for too, and that's what we're working for. Second, which Sandeep briefly covered, even look at each of these segments, even down the pyramid, in a way the supply chain financing had been done. So look at them as a seller and a buyer in the ecosystem. Look at two nodes coming together rather than a standalone SME. We need to know more. I mean, as Vipul said, again, he knows what his retailer is getting from which customer, cash, check, there's an entry, there's money in the book. Is the same way somewhere in the middle of the pyramid, there's a wholesaler, there is a stockist, there is a local regional manufacturer. So you need to see his purchase side, his supply side, his DSOs, collections, cycles, and stuff like that. See them in an ecosystem as a supplier buyer ecosystem, and that is where you have now a next level data information, another layer of unstructured data, wherein now you are able to establish how this ecosystem looks like. And the last piece, I guess, from the digitization perspective, India has definitely moved far ahead. A few new initiatives which are just starting to shape up, ONDC, B2B BBPS, which are going live. These are addressing commerce and cash in a big way, and especially when it comes to the whole B2B ecosystem. And that's something which I guess as fintechs, all of us possibly would work together or should work together to get the commerce democratized, get the cash flows, their cash management democratized. And if that's the case, I guess then FIs have much deeper, better visibility into the whole lending piece.
Absolutely. We have 4 more minutes left. Would love to get questions from the audience for the panelists, if there are any. Anyone with any questions? No? Great. Sure.
Right. So I think one of the things that Gujot talked about is the friction which happens in terms of it is easy for him to, for example, call a money lender. So one of the things that we also sort of obsess at Checkbook is that we look at the friction in the journeys that we do. Right. How fast can you onboard a customer? And I think we worked on a sort of the neobank sort of current account proposition for almost like 2 years. To get it down to like a situation where we can onboard a customer in 3 minutes. And earlier when we initially started, it was taking like a month to onboard a customer on a current account. So that obsession is also very important because a lot of people confuse, the UPI adoption in the country to think that the customer or the trader in the country has become financially or digitally savvy. And the reality is that UPI is such a simple product to use that while he's getting a lot of payments and so on and so forth, he doesn't really have to understand it, and it's a great example of a wonderful product. And I think if we can get to that kind of seamlessness in terms of simplifying the architecture of the app and the products on the app, so that the customer doesn't have to spend too much time understanding what is what, it and reducing the friction in the journeys, that helps a lot in adoption as well. And I think the second thing is that, we actually want to get to a point where the customer doesn't even have to, even call a money lender. He can just come on the app, see that he's got a, overdraft line or a business loan which is pre-approved, click of a button, it's in his account. Which happens a lot, for example, for salaried customers today. They have a credit card, right? So they know they have 3, 4, 10 lakhs, 15 lakhs of credit available. You can use it in an emergency, and they also have pre-approved auto loans, pre-approved limits, and so on and so forth. You can get them in emergencies. Sometimes the apps don't work. That is another point. But yes, the availability is there. I think we need to get to that ecosystem because opportunities for these traders come anyway. Festive season aaya, saste mein maal chahiye. Okay, if I had credit access, I can nicely make a good handsome profit on it. There is a good deal somewhere. They are deal hunters at a next level. right? Can I get that deal? Okay, can I, if I buy a little bit more in bulk, I will get another 10% discount. All that calculation is continuously happening, and all of it adds to his bottom line. So how do we kind of empower that is really, the next level challenge.
Absolutely. I think treating B2B customers as B2C customers in terms of, having that frictionless onboarding and, providing products to them which are easy to use is absolutely, I think, one of the things that will help solve this. Thank you so much, everyone. Thank you for being here and sharing your views. This was really lovely to moderate.